So the book is out now to talk to individuals about how fragile things are in the market and how not to be swayed necessarily by the things you hear on media, so much, major media, large media. There's everybody out there in the mutual fund world, the stock and bond world, the ETF world wants to sell you their hot idea. And I think when you listen to all that stuff, you can be led into the wrong path of how to invest for purpose in retirement.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we're in 12/13/23. The year's going to be over before you know it. New book is out. We've talked about it before, but you really got to check it out. It is called Bonfire of the Sanities, Reset Your Retirement Portfolio for Today's Financial Lunacy. And if anything describes what's happening in the world, the economy, it's financial lunacy. It's written by David Wright. You know him well, and financial expert, author. David, it's great to have you back on the show. How are you?
Here I am doing well for a Wednesday, the hump day here, getting over the hump day.
Yeah, you and me both. So, hey, your book.
Yes, sir.
Tell us why you wrote it.
Well, originally I started writing it 3 years ago to talk to prospective clients and just interested parties about why it's important to know what your money is for. Purpose over performance. If you're later in life, probably the money you built over your 401k and your work career is probably more for supporting your Social Security or pension checks, and understanding that there might be a slightly different discipline of how you invest for that situation. But, you know, Kerry, the only constant in our world is change. And with the COVID crisis in 2020, the book took on a whole new meaning. The financial lunacy that occurred after COVID, with the economy shutting down and the black swan event of an economy shutting down, and then, almost 2 trillion printed cash back into the economy to provide businesses and individuals with, their little ounce of gold, has set the whole planet afire here with what the feds are doing. The feds reacted, as I'm sure you're aware and talk about all the time, very slowly to all of the 2021 revelry with the recovery in the market, with all this free spending money and a lot of free time on people's hands. People were out taking trips, traveling. The feds kind of sat on their hands for much of 2021 and didn't raise rates. So now we're in a situation where feds have raised rates by 550 basis points on the short fixed interest rate. And now we're in an inflation world that took hold in 2022. So the book is out now to talk to individuals about how fragile things are in the market and how not to be swayed necessarily by the things you hear on media, so much, major media, large media. There's everybody out there in the mutual fund world, the stock and bond world, the ETF world wants to sell you their hot idea. And I think when you listen to all that stuff, you can be led into the wrong path of how to invest for purpose in retirement, because this market can turn on a dime. We've seen it happen. We're waiting for Fed's Chairman Powell to make a decision today on which direction interest rates are going to go. We think they're going to hold. I'm pretty sure of that. I think the whole world is pretty sure of that. But the big $1 million question is, what will happen next year? Will the Fed start to pivot? And I definitely don't believe they will soon. I think they're going to hold rates higher for longer. And this book addresses that real situation next year, that if they hold rates higher for longer, how that's going to impact the markets and how that could impact your retirement and how you only get one shot at this. So it's important to get a copy of this book, Bonfire, the Sanities, follow a step-by-step process of the reasons why it's important to invest for purpose, and take you through client examples of what happened in 2008 and why it's important to not make the same mistakes that folks made back in 2008.
All right. So, you know what they say, David, a smart person learns from their own mistakes, but a truly wise person learns from the mistakes of others. How do we learn from others' mistakes here so we aren't condemned to repeating them?
Well, by buying this book, not to put too fine a point on it, it's important to open your eyes up to professionals, individuals who've been doing financial advising for multiple decades. This is going on in my fourth decade. And when you look at mistakes that are made by other folks 5, 10, 15 years back, who believe that they could grow their way through retirement in the midst of what happened in the banking crisis of 2008, we're trying to help our readers avoid making the mistakes of investing all for growth, not being strategic with dividends and interest, understanding that you need to work with an income advisor, or at least have some sort of relationship with someone that understands how to produce income in a reliable manner that will allow you to never have to jeopardize your principal. One of the things that we saw in 2008, I would meet a lot of spouses in workshops and webinars and just meetings that I would hold here at the office. A lot of surviving spouses, a lot of females. Us guys tend to kick the bucket first, but a lot of the gals that would come in here who now have been handed this task of managing the pot of money that their husbands had managed prior to 2008, the ride back from 2003 to 2007 and 8 was pretty nice. After the World Trade Center collapsed in 2001, markets finally leveled off in 2003 and started to climb back up. Well, a lot of the spouses that invested in that climb from 2003 to 2008 were invested pretty much all in growth things, growthy mutual funds, aggressive stocks, and their advisors were pretty much drinking that Kool-Aid as well. But what a lot of surviving spouses found out after the fact, when the market started declining in 2008 and 9 and the banking issues, we started seeing a lot of portfolios that had been drawn on people pulling out their RMDs, their required minimum distributions, or just drawing income out of a portfolio that's actually shrinking by almost 50 to 60% is a suicide strategy, because basically what you're doing is liquidating principal. You're selling shares when they're worth less. Therefore, you can never humanly recover from that unless you make a pact that once it's hit the bottom, you just stop using the money and let it recover, which can take maybe 5 to 10 years to recover from that. So this book is to talk about the experiences that I've had and the ways that we go about understanding how you should invest. Everybody's situation is different, so I think you can learn a lot by the 35 years plus that I've done this.
All right. So, hey, talking about lessons learned, what do you think is the most important lesson of this book?
I think that the most important lesson of the book is, first, take from an income advisor the experience and knowledge that to invest for income, dividends and interest, is to know what individual securities that need to be tapped to produce the income. Broadly speaking, individual securities, individual preferreds, corporate bonds, and all of those types of things. Most people don't know how to pick those things. Most advisors don't want to work with clients on those things because either they don't know enough about them, don't know how to buy them, don't know how to manage them, or have the back office support to continue to monitor them. So the biggest aha from this book is make sure that whatever you take from your pot of money in retirement is the dividend and interest of the share you own, not the share itself, especially with what's going to happen probably in 2024 and beyond, because it isn't going to take very long for you to shrink a portfolio once you start needing to draw from it. And most people don't understand that. There's two phases, the accumulation phase when you're building the pot and the distribution phase when you're distributing the pot. Both of those phases need to be followed. And if you're in the distribution phase, your 60s and 70s, and you're still invested like you're in the accumulation phase, you're going to be in a position where you're going to be probably withdrawing shares or principal. What I see a lot, Kerry, are individuals taking faux income. We call it faux income because their advisor basically just set them up on a withdrawal plan to withdraw a certain amount of shares of their portfolio, hoping that the shares they don't withdraw for income grow in value during the period of time that they're taking money out. Well, I have a better way. The better way is to actually not liquidate shares at all. Just understand that whatever you built at this point in your life should be the pot that you're trying to sustain for the rest of your life. And if you can live off of that pot of money, getting 5 to 6% reliable income from it and never deviating from that, changes obviously need to be made from a geopolitical standpoint. We don't know what's happening with electric vehicles, those sorts of things. Changes need to be made to the investments inside the pot. That's why you should probably work with an income advisor to make sure that you're making the corrections and the changes that need to be made. But understanding, don't sell shares, live off the income.
I like that. And sounds like sound advice. David, how do we get the book? How do we connect with you on the web?
Well, you can connect with me on the web, first of all, with wrightfinancialgroup.com. WRIGHT is the spelling. Bonfireofthesanities.com is how you can get this book into your hands. It's a pretty easy read, about 177 pages, flows pretty quickly. And you can get, again, the book at bonfireofthesanities.com or wherever books are sold, Amazon, Barnes & Noble, or Books A Million.
Wherever fine books used to be sold, right?
Exactly.
All right. Hey, we appreciate you coming on again, David, talking about the book. Hey, if you've got a question for David or myself, shoot me an email, kl@kerrylutz.com. And there's a link to David's site in the show notes to this interview on financialsurvivalnetwork.com. Just click it and it'll take you right to David's site. And while you're on our site, please sign up for a free newsletter. I think you'll find it very useful. David, always a pleasure. Thanks so much for coming by.
Kerry, thanks for letting me be on.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.